Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. I'm talking to the Managing Director of Barton Gold, Alex Scanlon. Now, Alex and I spoke a couple of times last year, some very methodical work that they're doing down in South Australia at their Tunkillia and Tunkillia projects. Now, the Tunkillia project alone has close to a million ounces, I think I'm right, of contained metal, only growing. I want to talk to Alex about what they've done in 2022, but more importantly, unlocking the value for shareholders going into 2023. And maybe we'll also touch on his views on the gold sector as a whole. So Alex, welcome back to Small Caps. Good to see you.
Good to see you again.
Happy New Year as well, I guess I should say. Everyone seems to be growing.
And Lunar New Year as well.
Oh, and Lunar New Year, of course.
Yeah.
Year of the rabbit. Sure, there's plenty of rabbits down in South Australia. Look, Alex, first conversation with you for 2023. Cannot believe we're here already. Let's, if you wouldn't mind giving our viewers the overview of some of the milestones you reached in 2022, and then we'll come into 23.
I'm very happy to do it. Yeah, look, 2022 was really kind of a year for us. It was about establishing proof of concept and really shaping and crystallizing Barton Gold around our very South Australian pure play gold development enterprise. We, over the course of that sort of 12 months, beginning from, let's say, November 21 to November 2022, we identified 3 new gold zones at the cornerstone Tunkillia project, which is that 965,000 ounce project you noted. We've confirmed a new gold zone and mineral extents at an existing open pit we have that was a high grade producing pit in 2018. So that was really kind of a backwards looking proof of concept year. And toward the end of 2022, we really shifted forward into the look forward, where do we go from here perspective. And so that was looking at, okay, we've validated these theses. We found all of these structural repeats that we think we can go out and explore upon. And also in the existing mineralization that we have, we think that they are historically poorly tested to depth because of low historical gold prices. So let's go and test this. And we started in September, about 15,000 meters of drilling. And we ended the year with about 30,000 meters of drilling completed. And so we're now entering 2023 in really a look forward and look up standing. So in the end of December, we announced the first assay results from our drilling program. And those did indeed validate our thinking that there were broad gold zones of mineralization just below the current Tunkillia mineral resource at that 965,000 ounce deposit. We expect to have additional drilling results out shortly, about another 10,000 meters of reverse circulation drilling results. And then we should also have another about 5,000 meters of RC and diamond drilling results out on what we call our Area 51 prospect, which is close to that 965,000 ounce resource, but it's potentially an entirely new deposit. Oh. So again, looking at growing up resources this year, sort of maximize the strength of our platform, and then bring ourselves to the end of 2023 ready to say, right, we listed it, we proved our thesis, we grew it again, we grew it again. It's going to keep growing. Therefore, we are now going to shift our attentions to actual development thinking and strategy, and then essentially start 2024 with pre-feasibility studies. Now we'll keep growing in parallel. The ground that we have, we think, is very, very ripe for large-scale discovery. It hasn't been worked systematically since the mid-1990s. So it's kind of a dual strategy. And it really is about, hey, we've got this really good platform. Let's strengthen it a bit. Let's get a critical mass and let's convert that. Let's commercialize that, create that value, unlock that value, if you will, that we have in this platform today, including using our existing infrastructure. And then in parallel, we'll work on extending that in terms of the total duration of operational years ahead of ourselves.
You just mentioned the word infrastructure, which I always find fascinating. Talk to us about the infrastructure that you've got there, because I think it's pretty important if you're going to go into a development phase that people understand what sort of infrastructure are around your projects.
Yeah, no, it's good question. So we're right in the center of South Australia, so very much in the central Gawler Creighton. And we have excellent road and rail infrastructure going into this region. So it's actually right at the crossing point of the Sydney, Adelaide, Perth Railway, and then also the spur that goes up to Darwin. So you're kind of actually at the heart of Australian rail infrastructure. And you can drive almost all the way from, for example, Adelaide up to our projects on sealed highways. But because we're in this remote area and because it's been underinvested for so long, there's not the same type of processing infrastructure that you'll find, for example, in the Kalgoorlie region of Western Australia. Mm-hmm. There is one gold processing plant in the region, and we acquired that plant in 2019. We viewed that as sort of a critical piece of our strategy to make sure that we had the ability to take a step forward, not only one sort of at our whim or when we thought the time was right, but also at a much, much lower cost than developing an entirely new plant. So we have a platform of resources. We also have an infrastructure platform, and we can leverage these things two together. And it also just gives us a lot of optionality too. There's a lot of regional explorers around us as well. So there are opportunities to look at working with these explorers, whether in joint venture, whether as ore purchasing to blend into our ore, or simply toll milling. And that itself is sort of a different or entirely separate sort of business proposition that we have before us as we think about how do we grow our overall profitability, resource base, and production base.
I'm assuming that gold processing plant has been on care and maintenance. You purchased it in 2019. Is there going to need a bit of funding to get it back up and running?
Oh, sure. Yeah, we'll do essentially a basic workover and recommissioning. But I think fundamentally, and sort of to the heart of the point, it's not a major reconstruction or redevelopment of the plant. We think we can do this for $5 million or less, as opposed to a $20 or $30 million refurbishment. And of course, that's still a fair $5 million is considerably less than an $80 or $100 million development plus EPCM costs and whatnot that you have to go through to develop a plant, much less actually get it permitted.
One of the things I find fascinating, because I love the gold industry, and here in Australia, obviously we produce a lot of gold, but a lot of people look at, Western Australia, and they look at Victoria and New South Wales. South Australia doesn't appear on people's lips as often. Mm-hmm. Why did you, and I think we may have covered this in the past, but I really just want to emphasize this. What's the upside for this? Why do you think South Australia has been a little bit missed on the gold train?
Yeah. Well, I'll put it this way: I think it's been a lot of it missed, and that's exactly why we're there. In the first place, it probably should, well, maybe not go without saying, but it's worth saying that the South Australian government is extremely supportive of kind of our objective of revitalizing this entire region and turning it into a gold district. It's something that they've wanted to see happen for a long time, but why hasn't it occurred is kind of if you look at the history of South Australia, at least the sort of modern, sort of contemporary history, it's kind of a perfect storm. In 1995, the end of 1995 and early 1996, there were two significant discoveries in the central Gawler Creighton of South Australia. So again, right center of the state where we are. And this was the discovery of what was then the Challenger deposit, and that became the Challenger gold mine, and that produced 1.2 million ounces of gold between 2002 and 2018. And sort of on the other end of this known gold province, there's the Tunkillia discovery. Now, we now own both of those assets. What happened was in 1997, the US dollar gold price started dropping precipitously. And so investment interest in gold went flooding out of the market. And when the gold price sort of came back, if you will, and this now we're thinking 2005, 6, 7, and 8, when the US dollar gold price got back to $600, $700, $800 per ounce, there had not been the historical critical mass of interest in that region for people to come flooding back. Everybody had been actively digging, exploring, mining in Kalgoorlie for 130 years. Not so in South Australia. but the geology is exceptional. We keep finding repeats of structure and repeats of mineralization in a long, sort of a long list or a huge buffet of targets that have never been tested historically. So it's really essentially an untapped opportunity, and it's one that we recognized. We started looking at this region in 2017, and we identified that we could essentially consolidate the substantial majority of all significant historical exploration and production ground in a proven gold district, not a theorized gold district, but a proven gold district, which is a 130 years history of operation. We could put that together without anybody realizing what we were doing or paying attention, and therefore we sort of popped up onto the radar in 2020 and early 2021 saying, hey, we've consolidated all of this. By the way, we've invested $8, $9, $10 million of additional capital pre-IPO, proving that there's all these interesting structures. Now we'll take it to market. We'll raise $15 million. And then we just went along validating these theses one by one. And here we are today with a substantially strengthened platform that we can actually convert into operations with a little bit of fast footwork.
It's interesting, since I last spoke to you towards the end of last year, your share, clearly the market's starting to sit up and take notice. What do you put that down to, Alex? Because it felt to me like it was a little bit of go slow for a while, but there seems to be a little bit of momentum and a bit more attention on Barton Gold as we head to 2023. What's been the catalyst for that, do you think?
Well, look, I think certainly one of the most important things is the US dollar gold price sort of rejuvenating. I think it's plain to see that the US dollar gold price is sort of the proxy for how people are feeling about the gold market and gold equities right now. That said, I think there's been a pretty significant disconnect between gold equity sentiment and the US dollar gold price. And certainly if you're an Australian investor or Australian operator, the Australian dollar gold price has been a very, very strong disconnect for the past couple of years because people were very disappointed that the gold price went down to $1,700 US. $1,700 on any type of reasonable medium-term moving average, it's still an all-time high for gold operators to be, or explorers to be leveraging. So it's sort of early November, there was sort of a real moment in gold where the gold price sort of really started climbing back up quite quickly. And that, I think, really just took a lot of pressure off of the market and started to bring people's attention back to it. And then what we've found in our engagements is that, we've been out there doing a lot of work consistently, even through so-called, bad market for gold, doing a lot of work, spending a lot of money, working hard to monetize our assets. So we keep sort of essentially restocking our treasury while spending it on exploration. But it's really for us been a lot of positive feedback about sort of consistent progress, clear messaging, doing what we say we're going to do, and then also starting to articulate more, okay, this is what we've got and this is how we're going to move it forward and this is what it's going to become. And I think that kind of just all wrapped up for us around sort of November, December last year. We went on a roadshow in Europe, and which was preceded also by some conferences here in Australia. And we just got very, very strong feedback about sort of the quality of the assets, the quality of the opportunity, the quality of the team, and the quality of our execution. And I think, hopefully we put ourselves in the position where when people are ready to look back towards gold investment, whether physical or in operators or explorers, where they sort of take that approach of I'm buying leverage to the gold price, we hope that we've put ourselves in the position of being the team where people say, those guys have done everything they said they're going to do. So I know that I can invest in those guys and they're going to keep performing. And with tailwinds in the gold price, I'm in a great position. So these guys are on the front of the wave instead of just chasing the wave 2 years late once the full sentiment is back.
Yeah, you saw the wave before the wave started. Pretty simple question, but pretty important. How do you unlock value for current and potentially future shareholders?
I think there's kind of two primary ways that we look at doing that, right? So first is scale. So there is certainly a non-linear relationship between scale and profitability in mining. So the larger you can do something, is essentially the more efficiently you can do it, whether it's digging it, moving it, or processing it. So we have already started, if you will, on a very strong platform. So we have a 1.1 million ounce resource base currently, and we have a mill. So where we're starting in terms of building scale for the long term is actually where most, let's say, explorers or developers actually trying to get to. They try to get a 1 million ounce resource to justify building a mill. We have both of those. We're actually trying to get 1 million ounces to 2 so that we can go to something that is a much larger scale development. We don't want to be producing 70,000 ounces as our end objective. We want to be targeting 150,000 ounces. We might produce 70,000 ounces as an interim step to de-risk and start funding ourselves internally. And we can do that using our infrastructure. So it's building scale. And then the second part is really conversion, right? It's converting from idea to, you know, actual fact, actual platform into actual development. So moving the assets along the risk scale, or sort of, I should say, down the risk scale and towards the certainty of operations. And that's why we're really focused on being quite clear. This is our commercial imperative to become a 150,000 ounce producer in 5 years' time. We'll continue to extend resources in parallel with that, but just taking clear, definitive steps that show people, hey, we know where we're going. And by the way, we've got a team that's got 200 years of combined experience discovering, studying, evaluating, financing, developing and operating resources. We know what steps we have to take. We know what our target is, and we are going to get there. It's just a question of following the recipe that we understand and diligent execution.
Do you think you're a little bit more commercial? And look, I'm not putting down anyone else out there, so don't go sending me horrible messages, ladies and gentlemen. But I just want to know, Alex, you've also got a finance background as well. So do you look at this, do you think, in a more commercial way? Because every time I've spoken to you, it's always about getting into producing 150,000 ounces, not 10 years down the track, but pretty much, I think you said in the past, 2024, 2025, which is not that far away.
Yeah, look, I think we are a slightly different team than you might expect to find inside of a traditional sort of explorer, if you will. And we sit in this odd space between explorer and developer. And really, we're kind of an advanced asset manager who's just regrowing the asset base. So we have a team that reflects these forward ambitions. And we probably bring some slightly different tools to the table, right, from our various different backgrounds. So, we can reach out and do things like trade. We can access sort of offshore exits for our gold and gold concentrates in a way that may not necessarily be quite so accessible to many other juniors or participants in the market through our commercial relationships. And I think the other thing too is, we really, when you think about our strategy, we've established a really dominant position in the Central Gawler Craton. So we kind of have a tactical advantage, both in terms of the scale of resources that we already have. We're far and away, we have the most resources in the region. So we've got that critical mass there. And then we've also got the critical mass in the infrastructure. And our approach is to look at how we become the operator so that we can become the consolidator of the region. And a lot of other companies, and there's nothing wrong with this approach because it can be quite beneficial for shareholders. If we had the option of, for example, selling our assets to another operator in the region who had a mill, or there were 3 or 4 mills, we might be more purely focused simply on growing that resource to make it more and more attractive for somebody who owns a mill to acquire. Right. In some sense, we've made ourselves hostage to ourselves. There is nobody else to buy us, and we own the mill. So our number one objective is to get our ground, or our ore, if you will, through our mill. And that just sharpens the focus quite a bit for us.
How do you fund it?
Very carefully. We
love it.
We did 3 rounds of private equity raising pre-IPO, and then we did a private credit raising as well pre-IPO. So that was a convertible note that converted into equity at IPO. We raised $15 million, 15 million in June of 2021.
Yep.
And Since that time, we have been spending money aggressively but carefully. So we sort of try to take our shots very carefully, and then take a lot of those shots. And we've had a pretty high conversion rate between dollars spent and meters in the ground to exploration outcomes. But we also, again, with the benefit of the sort of the infrastructure, the asset package that we purchased, we have a long list of surplus assets that are either surplus to our requirements or we don't need to use right now. So we can actually monetize these assets in a number of ways. Some of the ways are quite simple and rudimentary, disposing of excess old vehicles that don't meet our requirements or we need to replace anyway, disposing of surplus plant and equipment that we may never need to use. We have sold two portions of our Central Gawler camp. So we have a camp near the Central Gawler mill, which is far larger than we will ever need for our regional strategy and operations. So we can dispose of these assets that are essentially trapped value and restock our treasury while we're spending that capital. And there are some of the kind of more fun and exciting things too, like cleaning out our gold plant. So in early 2022, I actually went up to the mill with some of our team, and we cleaned out some extremely high value material. And we sold $1 million worth of gold in June of 2022. And then just before Christmas this year, I think it was the 20th of December, we announced it. We actually did a full disassembly, clean out and preservation of all of the equipment on the gravity circuit and the gold room for the mill. And we ended up recovering about 10 wet tons of material out of the plant. So that will also go off to processing. So in some ways, we're kind of literally mining gold out of our own installed assets.
Wow.
And doing that really as a side benefit to work we would do anyway to start advancing these assets towards, in the case of the mill, looking at optimizing that mill for a restart at some point in the near future.
When you just said restart the mill in the near future, what's the near future mean to Alex Scanlon?
So if we kind of look at our big picture plan, right, our big picture plan is to target 150,000 ounces production in 5 years' time. If we think about...
Sorry to interrupt you, 5 years from when I speak to you right now?
Correct. So say a little bit less than 5 years. So we put this out in the market, I think in November last year, that we sort of have a 5-year plan to be producing 150,000 ounces, or an ambition, I should say. Part of that is combining the Tunkillia project and the Tunkillia project. So Tunkillia is this very large scale baseload mineralization, and Tunkillia has all the indications of potentially multiple high grade open pitable sources of mineralization that can act as a feed blend at Tunkillia, because they're only about 70 kilometers apart. So again, we're looking at these projects really as one extended project for efficiencies of operation, scale, grade, et cetera, and so forth. The benefit of the specific orientation of these projects is that Tunkillia is 70 kilometers to the northwest of Tunkillia, and it is therefore within trucking distance of our mill. And the Tunkillia ore was actually processed through our mill in 2017 and 18 with extremely high recoveries, so about 94.5%, 95% recoveries. And when you're sending 3, 4, 5 gram per ton ore from that pit to that mill, it's very, very profitable. So as we build the big 5-year plan, we can then look forward at saying, okay, now we know what we're doing. Let's bring forward a subset of those operations. Let's focus on mineralization from Tunkillia. Let's go turn on the plant and bring forward operations 2 or 3 years while we then continue growing definitive feasibility, permitting and development of a new mill at Tunkillia. And then when that mill is operating, you combine all that Tunkillia and Tunkillia feed through that new mill, and you've just perfectly commissioned, quite profitably, our original plant to look at consolidating the region around that plant. So it's a very kind of, it's a multifaceted strategy, but it's really focused on sort of moving step to step and de-risking, essentially de-risking each next 2 or 3 steps with each step forward that we take.
Earlier you said your current resource is 1.1 mil, but you want to grow it to 2. How do you propose to do that? Is that pure get the rigs out there and be quite aggressive?
Correct. Yeah. So the area that we're in has not had modern systematic work since the 90s. In fact, the exploration license surrounding our Tunkillia mining lease, we couldn't find any drill holes on that after 1997. So again, gold price crash, interest in drilling and regional exploration just drops off a cliff. But the work that we did with new geophysics has identified sort of a dozen major structures in this region next to our open pit, which are analogous to the structure that created that open pit. So we're looking at essentially a lot of sort of greenfield, higher risk discovery, but we're doing it on the basis of a lot of technical information and a lot of geological and geochemical context that wasn't known previously. And then also the existing resources, to the extent that there are existing resources, they were typically found at a time when the US dollar gold price was considerably lower.
Yeah. That
965,000 ounces at Tunkillia, about 90% of the drilling that informs that resource, and we published that in October 2020, about 90% of the drilling that informs that resource was done when the US dollar gold price was mostly below $500 US per ounce. So, we now have a gold price that's more than 3 times that. And what that means is, in our sort of contemporary way of thinking, the historical search domain, the depth to which they would be willing to drill and the areas they would inspect for mineralization was artificially restricted. That search window is dramatically larger for us today. So we have every reason to believe, based on historical data, that we would find repeats of mineralization in new gold zones. Again, in mid-December, we validated that thesis. We're drilling hard on it. We think that we'll be able to grow that 223 deposit just based on depth extensions and testing areas that are just outside the historical search domain. And then again, it's really discovery. We have found 3 new gold zones at Tunkillia undercover using new geophysics and geophysical, algorithmic processing, which we co-developed with one of our consultants. And it has correctly predicted 3 times the location and orientation of what we think is our target mineralization undercover. So we predicted it, and then 1, 2, 3 tested, validated these new gold zones. So it's been a lot of really high speed sort of R&D, thinking differently, innovation, discovery, and now we're sort of rushing to bring those up into potential new mineral resources that could be developed, and then just rinse and repeat, continue this process, keep growing the footprint, keep building, because we think that we will demonstrate over the next 5 and 10 years that a major should have had this ground 30 years ago and worked it systematically. I think we would see very, very different region there today if that had been the case.
Oh, listen, we've run out of time. Alex, I could talk to you for such a long time, but it's going to be interesting because I think you do have quite a, well, it's fascinating where you are. Alex, last comment goes to you. Just wrap it up for me if you would, but we've run out of time. So just a quick wrap up as to why you think people should sit up and take notice.
Yeah, look, in our case, I think 2023 is going to be a very exciting year. We've done a huge amount of work. Really right now is an opportunity for investors to step in on the back of an enormous amount of exploration momentum on a great platform. Again, in terms of creating real value, we have the infrastructure to leverage that. And really what it all comes down to in terms of updates for investors, we have a lot of news flow that will still be coming out over the course of the coming 3, 4, and 5 months. We have another 10,000 meters of drilling results due from the 223 deposit. We'll have another 4,000 meters of drilling results or so due from Area 51. We expect to have a mineral resource update of that main deposits around April. Hopefully, we'll have another update slightly later in the year if we can convert Area 51 into a resource. And then we're going to be right back out in field, following up all the low-hanging fruit for another resource update by the end of the year before kicking off feasibility studies. So it's going to be a very exciting year for the company.
Watch this space, ladies and gentlemen. Barton Gold ASX code, as I said before, is BGD. I sometimes have to look because I go, once I said it was BDG, it's BGD. Alex Scanlon, great to see you again. All the best for 23. Come back and give us another chat very soon.
Thank you.